Well, this may not have officially been a budget, but actually it was one of the biggest budgets of my lifetime. Biggest set of tax cuts in any budget since 1972, exactly 50 years ago. Tax cuts for particularly higher earners, of course, the getting rid of the 45p tax rate, but also the basic rate coming down to 19p, and the reversal of what Rishi Sunak was putting in place, the corporate tax and national insurance increases are no longer happening. And that really is the story of this budget. This is a complete reversal of policy compared with the government as it was just a few months ago. This was like an entirely new government coming into office, and it wasn't just those headline tax rates that were changed, a whole series of other things, including the so-called IR35 provisions, which are about how companies are supposed to ensure that people are contracting with them, are genuinely contracting with them and not being employees. The risks here are obvious, putting upwards of £40 billion into the economy when the Bank of England is really worried about inflation. We're all worried about inflation. Sticking a lot of money into an inflationary environment is really very risky. And secondly, of course, the impact on the public finances. They were getting worse anyway because the economy is doing less well, and this is adding more than 40 billion to expected borrowing on top of that. We've seen the reaction of the markets today. Interest rates on government debt have spiked more quickly in a day than I think ever before, certainly in the last 30 years. The pound is doing badly as well. This is a huge economic experiment which carries with it lots of risks, as well as, we hope, the potential upside in terms of economic growth that the Chancellor spoke so much about.